Are you ready to secure your financial future and grow your wealth steadily for decades to come? Today, I'm revealing the top 5 long-term investment stocks across the US, UK, and Canada that smart investors are eyeing for 2025 and beyond. These stocks have shown resilient growth, strong fundamentals, and massive potential, with proven track records over the past 3 years. Whether you're a seasoned investor or just starting, these gems deserve a spot in your portfolio. Let's dive deep into each one and uncover why these are the ultimate long-term holds. First one is Apple Incorporated, AAPL, USA. Market cap, $3.01 trillion, 2025. 3 years price history, from $1.20 in early 2022 to $201.36 in early 2025, about 41% growth despite market volatility. The stock's price fluctuations over this period reflect how Apple navigated these headwinds. In early 2022, fears of inflation and monetary tightening led to a tech sell-off, temporarily depressing Apple stock. However, the company's resilient business model, driven by continuous innovation and a growing services segment, helped the stock recover and even gain value. Apple services, including the App Store, iCloud, Apple Music, and Apple Pay, have grown at a compound annual growth rate exceeding 20%, contributing to more stable and recurring revenue compared to hardware sales. Please, innovation pipeline fuels future optimism. With ventures into augmented reality, AR, virtual reality, VR, health technology, and custom silicon chips, Apple continues to lead innovation, ensuring its ecosystem keeps users locked in. The company's strong cash position of over $200 billion offers financial flexibility for R&D, acquisitions, and aggressive stock buybacks, actions that boost shareholder value. Why is Apple the best long-term investment? Its unparalleled brand loyalty, steady revenue growth across hardware and services, solid financial footing, and continuous innovation position it for sustainable growth. For investors focused on tech exposure with balanced risk, Apple is a blue-chip stock that offers both growth and income through dividends, making it a cornerstone holding for 2025 and beyond. Next is Unilever PLC, ULVR, UK. Market capital, £117.22 billion GBP. Stock price £4, 675.00 GBX. 2025. Unilever PLC, a leading global consumer staples company, stands out as a top long-term investment, especially for those seeking stability and income in uncertain times. With a market capitalization of approximately £117.22 billion, $160 billion, in 2025, Unilever has a broad portfolio of trusted brands across food, beverages, personal care, and home products. The price movement in this period was influenced by inflationary pressure on raw materials and logistics costs, squeezing profit margins. However, Unilever successfully passed many of these costs on to consumers through strategic price increases without damaging brand loyalty. Additionally, its geographic diversification, with a strong presence in emerging markets like India, Latin America, and Africa, offers volume growth and margin expansion as these markets develop. Unilever's sustainability initiatives are key for long-term investors. The company's commitment to reducing plastic use, cutting emissions, and promoting ethical sourcing resonates with environmentally conscious consumers, creating a positive brand image that drives future sales. This forward-looking strategy also mitigates risks from evolving regulatory landscapes. In conclusion, Unilever is an ideal pick for long-term investors seeking steady income, resilient growth, and exposure to consumer staples that perform well even during economic downturns. Its diversified portfolio, global footprint, and commitment to sustainability make it a dependable and defensive stock for 2025 and beyond. Third is Shopify Incorporated, Shop, Canada. Shopify Incorporated, Canada's premier e-commerce platform, offers compelling long-term growth potential despite recent volatility. With a market capitalization around 134 Canadian dollars and 1 cent Billion CAD USD, stock price is 103 Canadian dollars and 29 cents USD. Shopify plays a pivotal role in the global digital commerce ecosystem, enabling over 2 million merchants to build and manage online stores. Despite the steep stock price drop, Shopify's underlying fundamentals remain robust. Its revenue has been growing at a strong compound annual growth rate of 35% over the past 3 years. This growth is fueled by a rising number of merchants, expanded service offerings, such as payment processing, shipping, financing, and a growing global footprint. These diversified revenue streams are starting to drive improved margins and path to profitability. The price volatility reflects market sentiment and macroeconomic uncertainty rather than deterioration in business quality. As monetary policy tightens and economic growth slows, investors have become more cautious about growth stocks with longer-term payoffs. Why consider Shopify for long-term investment? Because e-commerce adoption is accelerating globally, and Shopify is the leading platform powering this transformation. Its strong brand, merchant base, innovation in services, and expansion into new markets create a durable moat. Patient investors willing to endure short-term price swings could benefit significantly from Shopify's growth trajectory as digital commerce continues to disrupt retail. Fourth is NextEra Energy Incorporated, NE, USA. NextEra Energy is a leading American utility and clean energy company, widely regarded as one of the best long-term investments in the energy sector. With a market capitalization near $137.80 billion. Stock price is $66.94. NextEra focuses on renewable power generation, including wind and solar energy, aligning well with global decarbonization trends. Over the last 3 years, NextEra's stock price appreciated from around $70 in early 2022 to $66.94 in early 2025. The stock's growth is primarily driven by strong demand for clean energy and supportive government policies, promoting renewable infrastructure. NextEra's aggressive investment in solar and wind farms, battery storage, and smart grid technology has fueled consistent earnings growth, averaging approximately 12% annually over this period. NextEra benefits from long-term power purchase agreements that provide stable cash flows and hedge against commodity price volatility. While it faced challenges from rising raw material costs and regulatory complexities, its scale and operational expertise allowed it to manage expenses and continue expanding. Why is NextEra Energy a top choice for long-term investors? It is strategically positioned to capitalize on the global energy transition from fossil fuels to renewables. Its diversified renewable asset base, strong balance sheet, and growth pipeline ensure steady financial performance in coming decades. For investors seeking sustainable growth and exposure to climate-friendly energy, NextEra offers an excellent combination of stability, growth, and income. And the last one is Royal Bank of Canada, RY. Canada. Royal Bank of Canada, the largest bank in Canada, is a compelling long-term investment with a strong track record of stability, growth, and shareholder returns. As of 2025, RBC boasts a market capitalization around 248 Canadian dollars and 9 cents billion, reflecting its dominant position in Canadian and North American financial markets. Over the past 3 years, RBC's stock price rose from roughly 110 Canadian dollars in early 2022 to about 175 Canadian dollars and 41 cents in early 2025, a gain of around 22.7%, not including dividends, which yield approximately 4%. This steady appreciation highlights the bank's resilience through inflationary pressures, interest rate hikes, and global economic uncertainty. RBC benefited from rising interest rates during this period because higher rates typically improve banks' net interest margins, the difference between interest earned on loans and interest paid on deposits, boosting profitability. The bank also maintains strong asset quality with low loan losses, thanks to prudent risk management. One of RBC's core strengths is its diversified business model. It operates across personal and commercial banking, wealth management, insurance, and capital markets, which helps smooth earnings volatility. Its growing wealth management division, with higher margins and recurring revenue, has been a key driver of growth. The bank is also investing heavily in digital transformation, improving customer experience, operational efficiency, and lowering costs, essential factors for staying competitive in the evolving banking landscape. Why invest in RBC long-term? Because it offers a rare combination of capital appreciation, steady dividend income, and strong financial fundamentals. Its market leadership, risk discipline, and focus on innovation position it well for sustained growth, making it a dependable choice for investors seeking stability and income in the financial sector. So let's quickly recap the 5 best long-term investment stocks you should be watching and possibly buying in 2025 and beyond. 1. The Apple Incorporated AAPL, a tech giant with strong cash flow, growing services, and consistent innovation, making it a reliable long-term growth stock. 2. The Unilever PLC ULVR, a global consumer staples leader with resilient cash flow and solid dividends, perfect for defensive long-term investing. 3. Shopify Incorporated Shop, a high-potential e-commerce enabler poised for long-term rebound as digital retail continues to expand globally. 4. NextEra Energy NE, a clean energy leader combining stable utility income with aggressive growth in renewables, ideal for ESG-focused portfolios. 5. Royal Bank of Canada RY, Canada's largest bank, offering steady dividend income, strong financials, and diversified revenue for stable long-term returns. Conclusion: if you're building a long-term portfolio in 2025, diversification across geographies and sectors is key. From tech innovators to dividend-rich consumer staples, clean energy champions, and resilient banks, these 5 stocks offer a balanced mix of growth, stability, and income. Drop your thoughts in the comments. And don't forget to like, subscribe, and hit the bell icon for more deep dive stock content every week. Thanks for watching, and I'll see you in the next one. Happy investing!